All right, then let's just verify that my screen shows appropriate information. And then we can start. All right. Okay. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. This is my bio. For those of you who are new, welcome. We do have a broadcast on Alone. Yes, Alone is here. We have a broadcast on live on the YouTube. Welcome on YouTube. If this is your first live event, do me a favor, click on subscribe, click on like. We're trying to grow our membership on YouTube. And if you're not on YouTube, please, visit, find Tradespoon on YouTube and hit subscribe button. For those of you who are new, this is my brief bio. I was Executive Vice President, Head of Technology at Options Express. My background is technology. I'm very passionate about AI, writing software, and financial models to help generate signals in the market. And I also trade these signals in live trading room environment. So that's kind of the difference between, Tradespoon and Yellow Tunnel and maybe other subscriptions you guys have. Usually it's either, X market maker or, a technology, but they don't do both, right? You either trade using, what you learn being a market maker, or, you have signals, but you don't trade them. So that's the unique proposition. Disclosures, very important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor, not registered as FINRA nor SEC. All right, trading psychology is important. I encourage everybody to keep a journal and keep a trading plan. That's very important. Have written down rules. Most important rules is risk management. I propose to have 30% of your portfolio in cash, and always look at the portfolio drawdown. Portfolio drawdown is number of positions and, position size, and what is your stop level. So my proposal is not to risk more than 2.5% of account value per position. Depending on position size and levels of experience, it could fluctuate between 1% and maybe 5%, right? But I think this is a good start. 4 positions and no more than 2.5%. If you're down 2.5%, then you're out, right? No matter what your opinion on the market is, or because things happen every day and market can move. CPI data came in better than expected. We talked about yesterday. It's a pattern of so far lower highs on yield and lower lows on yield, and we are back. 10-year is back to the recent lows, right? Kind of a reversal. Wasn't able to break 50-day moving average on better than expected CPI data, and the interest rates are back to. I don't know if the data is updated, but it came in, I think, expectation months over months was 0.1, came in as 0. And I think core CPI 3.5 came in as 3.4. So you have a tick down. It's not enough to make any changes, but I think probability of interest cut in November is now almost at 100%. And it fluctuates, right? We have PPI data tomorrow, it can change. We have Powell speak in the next couple hours. But meanwhile, it's a welcome news, much better than the last. IWM is up almost 3%. KRE is up 3%. ARC. So, yesterday everybody was worried about real estate, commercial real estate, and defaults on the regional banks. Everybody kind of put that aside today and concentrating on better than expected inflation data. So that's important. In terms of key support and resistance levels, or before we do that, let me just look at my account, because I do have significantly. Let me try to change HPE maybe to 30 cents or 40 cents. Let's do 0.40 for now. I'm going to change this HPE data because it's getting close. Replaced. Okay, good. Okay. Almost forgot about it. So this is the calendar spread. 21 call from last week, calendar spread, and long 21 call this week because of high concentration. It looks like it is. On the positive news, we are up. We were up higher. Yeah, 2090 or something like that. We'll see where we're going to open. Okay, 2082. 2082. So it's fluctuating. So I changed the price. Right, I changed the price to 0.40, and then butterfly on the butterfly on Oracle is trading up 10% again. High VANA, high open interest at 140 strike, right? So the idea was that buying 135, 140, that it will gravitate toward 140, and looks like it is, right? So based on the open interest and positioning, and the butterfly right now is trading at $1.30. So I spent 80 cents. Let's see if we can double the money, right? $80.80. Let's see if I can close for $1.80. It's trading at $1.40, $1.50 right now. Or I guess I can, I mean, the other way is to close the, it's two spreads, right? 135, 140. So you have two choices. Well, let me put $1.80 for now because it's getting close, $1.40, right? So one choice is you can close it as a butterfly, right? So close it for $1.80. It's trading at $1.40 right now. Or you can do, these are two spreads, right? The bullish spread, 135, 140 bull spread, and then you have 140, 145 bearish spread. So if you don't think it's going to gravitate toward, if you think it's going to stay at 140, that's where the maximum profit is, right? There was a large positioning yesterday at 140, still is, right? July 19. Yeah. So biggest position was right at 140, but it could continue to grade higher, especially after the CPI data. Powell might say something positive that he's going to cut interest rates in November. So PPI tomorrow going to come in better than expected. So it could move to 145. So then you would just close. So based on your, opinion, you can. Based on your opinion, you can, if you think it's going to stay at 140 because this is where the highest open interest and it's not going to break through that level, then you would split it into two trades. But you do have a lot of position at 145 as well, right? Let's just double check that because this is old data. Let's just close it. Let's go, John. Bill, thank you very much. Bloomberg is offline. Can't get on any of my services. Sorry about that. Morning. CPI. Kevin, CPI came in today. A little bit better than expected. What was I about to show? Lost my. Oh, yeah. So butterfly, right? So this is a bullish call spread, and this is a bearish call spread, right? So these two spreads, you can treat one, right? I mean, you can either do this, you can try to close this. I mean, maximum gain is $5, so if it gets to $4, you can close it. I think it's getting close to my fill price. Oracle is 138, right? So let's see. I mean, you can always close it if where's the debit spread trading at. So it's 420 minus 250. So it's trading at. I'm going to keep it as a butterfly because I don't want to take the risk, because I can close the debit call spread right now for. Let's look at that trade view. Well, first of all, let's look at the position just so I don't jump all over the place. All right, so let's verify Oracle. Yeah, so you do have very large positioning at 140 and then 145 and 150. So it can gravitate. The VANA, right? The flow. The idea. I mean, it's a second derivative. You know how quickly the delta changes respective to volatility, but it could act as a repellent or as a magnet. And right now, I mean, it could get repelled to the left, right, to back to 130. But if there's a continuation of positive news and Powell speaks, we could get to, 145 or higher, right? So that's kind of something to keep in mind when you make the decision. Not so much what the VANA definition of VANA is, but where's the high open interest, right? Where are people positioning, going back to game theory, right? For trading, it doesn't matter what Vlad thinks. It matters what, majority of the people think, right? So positioning, futures positioning, options positions is very important. Okay, and then where are we with the spread? Okay, we're getting close. It's a wide bid and ask because market just opened, but once it settles, it's gravitating basically to the strike price that we talked about. So it was already at 140, right? It was already at 140. HPE pulling back. Let's see what's HPE is trading. HPE is trading at 15 cents. So I can close HPE, make a penny. Not sure if that's what I want. So let's change it to 30 cents. Let's see if we can double the money on HPE as well. If I get 200% return trades, that's great. That would be great. Okay. Any questions on HPE or on Oracle? So two different approaches. One was the calendar spread, one was the butterfly. In both examples, I rely on high open interest and VANA because it's a strike price selection. If you're trading options, the most difficult task is, figure out the strike price. Expiration months, it's a little bit easier. Also could be tricky with calendar spreads, but strike price selection is the most difficult. So these are good exercises in general to find support and resistance, and even if you're a stock trader or not. Market just come back because it's so high and also rhythm kick in. Carmen's, seasonality is tricky, right? So the question is about seasonality, right? Sell in May, go away, or June and July is great during election year. you get both arguments on that subject. Seasonality alone is not enough to make a decision. You usually don't want to make a decision, but you're right that usually June is kind of still positive, and then then it starts sliding down into July, right? From seasonality point of view. That is a true statement. During elections year, it's actually the opposite. During elections, I mean, used to have this functionality, but like once every 4 years doesn't. If you just plot the same graph, but use the elections year only, then it's June, July is actually positive. If you plot only elections year, but this is not enough to make a decision. Out of Oracle $1.75, Lalit, nice trade. Should I change to $1.75? What are they? 80 cents or $1.60? So that's over 100% return. Okay, change it to $1.70. So I can concentrate on. I mean, I need to do the webinar and so. Okay, $1.70. That's good enough for this trade. All right, so this is a good example. I'm out $1.70 if you can watch it, right, carefully, because I mean, Paul's speech could be negative, right, and then Oracle will reverse. But I think it will gravitate and stay at 140, and it could actually get to 145. What did I spend? 83 cents. 83 cents and $1.70, right? So I made 100% return. So these are example of asymmetrical returns, right? You're not supposed to even advertise triple-digit returns, right? SEC, not SEC, but what is it? You can get in trouble. But they do occur. They do occur, and the idea is to look at these volatility events, right? And make a decision, right? This is an example of a graph where there's a lot of selling of the puts, right? Buying of the calls, right? You see this negative VANA, that means people are aggressively selling puts that are bullish. Usually that means positive surprise, market moves to standard deviation to the right. Negative surprise, market moves towards these, short puts, right? So that's kind of an example of this trade where you could get triple-digit returns, right? But in this example, because of the large negative VANA, it doesn't make sense to sell volatility, right? You always have a decision: do I sell premium or do I buy premium, right? If you think it's going to stay within the range and volatility is going to collapse, you sell premium, which is most of the time is the right strategy, more often than not. Buying this volatility, often, right? So just the idea you have to keep always in mind is the probability of success versus return on capital, right? If you want higher return on capital and get 100% return overnight, well, your probability of success will decrease, right? If you want higher probability of success, well, then your return on capital will decrease. There's no strategy that, unless some market maker was other. But based on market conditions and based on the volatility footprint, you can kind of move the if you're doing active trader, right? If you're doing active trader, or if you're doing aggressive power trader, right? CrowdStrike was yesterday, so CrowdStrike was also a success, good trade. I got out of it yesterday, right? So bought at 374, it's trading at 391. I got out at 379. So 1%, 1.5% in short period of time. Then same thing. You wait 15 minutes, right? Right now, 15 minutes. You go to aggressive power trader. And today there were not a lot of signals today, obviously because market was hesitant, wasn't sure about CPI print. But INCY, biopharma. I usually don't trade biopharma, but it's a narrator. It's up 0.5% today. It's sitting here, but that's another signal. So you wait 15 minutes. It looks like some positive catalyst. I don't know, FDA approved of some drugs. Not sure. Big volume jump, consolidation, and then continuation on a large volume. That is usually a good setup, right? Forget the biopharma, but usually a good setup for continuation pattern. So you wait 15 minutes, and if you think it's going to continue going higher, then you add. I mean, you generate. In 15 minutes at this point. I mean, obviously the risk is Paul's speech. I mean, I can imagine he's going to say something negative, especially after the CPI data. But his speech was prepared. I don't think he alters that in the middle of the afternoon. So, but who knows? But that would be the setup, right? You look at the active trader, right? You look at active trader, or you look at the aggressive power trader. You wait for 15 minutes, like I did with the CrowdStrike, and then you look for 1%, 0.5%, depending on volatility on the trade. All right, any questions? How does algorithms work? It's neural networks. There's a lot of advances in the AI right now, and before, like, I would have to actually find like group, symbols into clusters, into ETFs. Now it's all done by AI, right? You can just basically tell it, group. In a simple algorithm, you basically say group stocks in the right clusters, right? Groups, right, that behave and have similar footprint and patterns, and then find the best model. There's thousands of these libraries, models, and find and train on the best model for each group. And then once you find the best model, make a prediction, right? So that's what neural networks do, right? There's a lot of advances in the past, with AI just in general. So, and they look for certain signatures, certain patterns, and they find patterns like this, INCY, right? This is a pattern, bullish pattern. So it finds a bullish pattern and basically says, okay, it's a valid bullish signal. It doesn't mean it's going to go up, no, but the odds, the probabilities are pushed in your favor. John, no politics. John, strategy, okay. Carmen, yes. All the models, whether it's stock forecast toolbox or earnings power trader, aggressive power trader, they're slightly different models, right? At any given moment, I actually don't even know what the model, which specific model, because it runs at night, trains. Most of the time it's the same model, but market conditions can change it. Say, okay, instead of model A, let's pick model B. Right, so if before I had to do it manually and type it, now it's kind of the system does it on its own. That's why some of these stocks I don't even trade them, but the algorithm picks them. I make sure the volume is okay, right? The volume is 4 million shares. Sometimes volume is small. People complain about the volume, which I agree. But for the most part, I try to put these signals if I think they're valid. Just be careful, because some people like Bob, he doesn't care if the volume is under 1 million shares. Some people like Robert, he cares, so I can't, not or generate signal just in individuals, right? I do it for all the subscribers. So something to keep in mind. All right, meanwhile, NVIDIA is up 3%. Apple is up 3% after the press conference, broke out. This is a good price pattern, right? Continuation. Huge volume, right, on AI, continues to trade higher. Texas Instrument is up 1%. Netflix is up 1%. These are some of the positions we have. Oracle is at 138, HPE 131. Actually, I think HPE was one of the trades. Maybe I can, or was it HPQ? I forgot. HPQ, let's see. So the model did see HPQ. Yeah, and it's breaking out. So I'm going to buy HPQ, small position. This is Profit Accelerator. I mean, I would say, it's volatile, right? If it breaks below, it could be a lower highs, lower low. So if it breaks below 34, 43, that would be bearish. So that's $2. That's 5%, right? That's 5%, right? 7%. So if it drops $2, I want to be down less than 1% of my account value. So if I have $10,000, that would be $100. So $2, okay, I can buy maybe 50 shares. Right? So I'm gonna go in and buy 50 shares, 38.71. Oracle is at $2.30. $2.30. So Lalit, we jumped the boat, right? So volatility is decreasing, it's in the money, right? And now the spread is at $2.30. Okay. So that's HPQ. The alert come in, alert did come in, good. And then I'm gonna try to sell half of the shares. At look for maybe 1%, right? 40 cents, so 37.10, 37.10. And then sell the other half. And maybe squeeze 1%. 1% would be what? 2% would be what? 80 cents, 37.80, 37.80. 37.60, 37.60. I mean, same thing. AI, strong earnings pullback, and potentially double top. Potentially double top or reversal to the downside based on PPI data or Powell's speech. So we'll see. So that would be my proposal for the HPQ. All right. So long HPQ. This is stock, so I have time. HPE, you know, I only have till Friday, so we'll see if it can get to 20 cents. I'm gonna change it to 20 cents. 20 cents would be 30%. Okay, leave it at 30 cents. Okay. Any questions about HPQ? Nothing anticipation, I put it up. Did I miss something? Ian, yes. So it's CPI data, right? So the biggest, and you can kind of tell by the footprint, right? All you have to look is at interest rates, right? Market is very highly correlated. When you have these large movements in interest rates, something happens, some kind of macro or some either macro event data. It wasn't a big deal, right? It's down maybe 0.1. Anticipation was 0.1. It came at 0. Anticipation 3.4, 3.3, blah, blah, blah. You know, that, you know, we need more data points. Nothing has really changed. Fed is going to keep the, but, you know, market reacts, right? Market has these, you know, whipsaws. So market, but it's a welcome news, right? Because January, February, and March, it was going in the wrong direction. Now, you know, April, May, it's going in the right direction. So that's the reason market is up. All right. I do want to close the QQQ put spread, right? It's down now. The hedges, yeah, well, 50%. I mean, I was keeping it for the group trade, for the CPI data. It could have been the other way. So I'm out of the QQQ put spread at 80 cents. It's 440, 450 put. Obviously, you can have a reversal. You might want to wait for Powell's speech or PPI data. You could have a sharp reversal tomorrow, but it's a breakout, and I have July 440, 450. Right at this point, you know, you have to have a significant reversal in the market, and the odds are low. Right, at least at this point, probability of success is low, so it doesn't make sense to keep the hedge. And you could put another hedge if you're bearish, but for now, obviously bulls are in control and probably will stay in control going into the July earnings. So I'm out of the QQQ put spread. Let's review other positions. It's 8:56. FXI. Bullish on an FXI. Let's see, is it participating today? No, it's not. It's consolidating above 50-day moving average, kind of building the bottom. It's probably close to the bottom. We could get to 26. But I have a stock, I have a put. For now, I'm waiting. Goldman Sachs. Let's see if Goldman Sachs is participating today. Banks are in general very interest sensitive, and Goldman Sachs, no exception, up 2.5%. Let's see, what are my costs? So I'm still down. Okay, no problem. Okay, so Goldman Sachs looks like found support near 50-day moving average reversal. It's a pattern of lower highs, lower lows. It needs to get above 461. We'll see if it's able to do that. We talked about HPE, right? We talked about HP. I'm waiting for the 21 call. We're getting close. Netflix and NVO. Netflix is up 654, double top. Let's see. 655 tough. Probably want to close it. It's not breaking out. It's underperforming QQQ. I've had it for a while. I'm going to close it. Right? It's underperforming. Still positive. So let me get out of Netflix. Traded several times. Netflix, I closed 657, so I bought it at 654 last time, right? 654.80, so 654 was a trade, 654. It's dropping. Okay, so 654. Let's do 655. I'm gonna try to close at break even on that last batch, breaking even. But in order to close at 655, it's trading at 654.20 right now. So getting out of the Netflix NVO. Double top, I mean, clean breakout, continues to trade higher. I trimmed the position, so I'm still long NVO. We talked about Oracle, we talked about QQQ, Silver, TGX. Silver, TGX. Silver is very sensitive to interest rates. It's up 2%, right? Found support at 50-day moving average, held the breakout level, so that looks positive to me. Still on silver, TJX, and Texas Instrument. Texas Instruments, clean breakout after the earnings. Consolidating, right, building the bottom and leg up now. So it's up now, and I have an order to close it.
Hello, Dan.
Okay, so let's see, Alex. Let me just send the order to market and close. Okay. Okay. Next, Ian, thank you. What does the option market show for Netflix and Microsoft? Well, Netflix, let's see. Well, just trying to close Netflix, right? So it's double top, right? So the idea is that until you have a breakout, right, from just technical analysis, you probably want to trim it, right? You probably want to trim it. And it's already kind of, see, it got to 655, and as soon as I say try to close, it's at 652. But in any event, so that's you know, that's Netflix. In terms of options data, what does it say? So let's look in June and July, right? In the next couple of weeks. So you do have a pretty large position in June and July expiration. Probably the highest volume is 685. I would say first one is actually right here. So first one is 650. No, 675. So on the upside, if it's able to break out, it will probably get to 675, right? And probably will stop. So that's 3% to the upside. On the downside, if it's unable, it could pull back 20 points, right? 630. So I think it's trading between 630 and 675, going into July earnings. So right, so ideally you want to buy at 635, sell it at 660, or if you see it breaking above 660, then you buy. In terms of model, our model, let's look at stock forecast toolbox. The trend is negative, right? So basically model detects that there is an overhead resistance, and until it breaks that overhead resistance, model basically say sell Netflix. So that's Netflix. Microsoft, model is kind of neutral. I think Microsoft, let's see. Well, that was yesterday. Did it break out? Because Microsoft was also, Microsoft is actually breaking out. Right, so Microsoft is breaking out. So if today, tomorrow, it's above the 432, then it's going to be a continuation, right? And it's going to continue going higher. So I would maybe rotate out of the Netflix, get into the Microsoft. I think that's a better trade. And in terms of overhead resistance, I mean, you have a pretty large volume at 460. So both can push Microsoft all the way to 460, right? Going into July expiration, right? If Microsoft is at 460, 4% up, I would not be surprised. On the downside, I mean, people are selling puts aggressively. So a lot more people are, based on dealers' positioning, a lot more people are a lot more optimistic about Microsoft than Netflix. So I would rotate out of Netflix and get into Microsoft. To overboard. Wine model never mentions TSM. I mean, in general, when the way I look at it, model very often. I mean, I've seen TSX, but like, let's say I know LRCX is constantly being picked up by the model, right? And LRCX is breaking out. So when you see a signal in a certain sector, they're highly correlated. Then you can kind of, what I usually do, if LRCX volume is not the greatest, I don't like the volume, then I would look, okay, what about Please check network connection. If you don't reconnect within 60, this meeting will end. Okay. Did I lose you guys? Can you guys hear me? Yes, yes. Okay, you're back. You're all good. Okay, sorry about that. Why not a credit put spread and HPQ for this week? Every time you do a spread, you basically say, I know what's going to happen by the end of this week. So it's a combination of, I would do it as a combination of both, right? I either, look at Oracle at 140. How incredible is this that, we guessed the strike price? That's awesome. So this Vanna stuff does work. Not always, but when it does, it looks pretty good. It's almost like magic. But anyway, I'm diverting. So what was the question? APQ. So you can do put spread, but then your assumption is that if you sell in a put spread, which is totally fine, your assumption is that PPI tomorrow is going to be also within expectation, and Powell is not going to say anything negative. I mean, it's a good assumption, but if PPI comes in harder than expected, you're probably going to have a big reversal if it's much harder. I don't think that's the case. It's not a base case scenario, but it's one of those outliers that you need to consider. But, it's the same strategy. The only difference is that, you have to be correct on timing. But I think those are both good strategy. Very low volume on TJX today, right? I forgot about TJX, right? Did you cover TJX? Oh, TJX is also pushing higher, underperforming, but it's consolidated, right? Very large move to the upside, consolidation, which is very healthy. And, I'm still bullish on TJX. Nice breakout on Apple. Yes, agree. Apple is a nice breakout. I agree. Kirill, thank you. Jeff, thank you. I'm back. Mario, thank you. All right, guys, you've been awesome. Thank you very much. Thank you on the Discord. You guys are awesome. You're back. Despite me going on vacation, everybody's back. Cherry Blossom, Rasa, L. Mark, thank you. I will see you guys tomorrow morning. Thank you for participating, and go to webinar. Thank you, guys. I will see you. Scott is today. I'll see you tomorrow morning. Thank you very much. Thank you. On YouTube, please hit subscribe button. Hit like on the video if you found. I'll see you guys tomorrow morning.